Let's get more on the markets. We're joined by Carol Schleif, Chief Market Strategist at BMO Private Wealth. Carol, thanks very much for giving us the time. Your overall take is that normal stock market fundamentals are taking a backseat here, and it's tariffs, for example, that are driving, and politics that are driving sentiment.
It definitely has been. You've seen markets look through even individual earnings, although companies are getting credit actually for pulling guidance or issuing multiple different scenarios because everybody is dealing with that same sense of uncertainty. And you've seen it not only in the stock markets, but you've seen it in all the capital markets in terms of that sensitivity and rolling out as you've had the back and forth on tariffs, you've had the back and forth on whether or not we're going to fire Chair Powell. So there's a lot of short-term focus on the news, and it's obscuring any sort of fundamental focus.
Let's have a look at a one-month chart for Tesla, maybe, because one stock that you point to is that Tesla's numbers were pretty weak, but the fact he's pulling back from the Doge office, reassuring investors, and the stock went up yesterday.
Right, and that's what, they missed on both the top and the bottom line by major amounts, maybe less than what investors had feared. You've had a lot of correction in that stock, but the fact that you're going to get its founder back in seat, if you will, and focused on turning that business around seemed to really cheer investors.
We are just apparently getting the first price increases from this tariff uncertainty. I was horrified yesterday to notice pomegranates at $2 each, but we won't dwell on my woes. But on a more serious note, Sumitomo Rubber saying it's going to raise tire prices by up to 25% in the US and Canada in response to the tariffs.
Yeah, you've got a lot of machinations going on with individual companies. And that's where the earnings calls for those of us that love to dig into them have been instructive, because you've got companies doing a lot of conversations with suppliers, trying to figure out, can they pass any along? Will they absorb it? Will they take it in the margins? So there's a lot of that going on. And once we get some clarity, companies are going to be able to move quickly, because it's not like they can necessarily stand still, even if they're telling Wall Street and investors, we don't know exactly how it's going to play out. It doesn't mean they're not planning and prepping for a variety of scenarios. And so some of them you're already seeing it, because the 10% across the board tariffs are there. Sectoral tariffs are there on certain goods. And from some of the early reads and the early information, it looks like the importers are bearing that brunt right now, trying to figure out, do they dare pass it along? Because as we all know, consumers have had it with price increases. And so the ability to pass it along is going to be substantially less than it was with the 2018 tariffs.
You enjoy listening to the earnings calls. They can be, I find them exasperating. Of course, CEOs often do what we like to call the happy dance. But what other strands are you hearing? What other themes are you hearing on the calls?
I think I prefer to look at the transcripts, and I like to dig into the footnotes and the questions and the analyst calls. I like the Q&A a lot more than I like the management's discussions. But I think pieces of that are that they are very actively trying to figure out where are their alternative sources, getting things lined up, researching different things, negotiating with customers and suppliers, trying to lobby the White House, if you will, for special exemptions. And so there's a lot of activity thematically that way. And it's also interesting to hear, even particularly, I'm watching closely the services industry, because I think there's a lot of potential blowback in services, in various services industries, both from Doge cutbacks and government contracts, but also potentially from global trading partners as a way to retaliate, if you will, against the seemingly punitive tariffs in a lot of different areas on our trading partners.
One stock we've heard a lot of portfolio managers indicating they like, and the stock has been trading at record highs, is Netflix. I suppose people are looking for a name they feel will be relatively immune to tariffs.
Well, and I think there's also that piece of, if there's a lot of angst among consumers, watching Netflix on repeat and all the various shows that they've got on there. I know in our household it's an evening activity just to kind of decompress from the day. It's a really nice way to do it. So having people give up, and the move they made a year or so ago to really crack down on password sharing has definitely helped the bottom line too.
I got to ask you, what are you watching in your household right now? What's top of your viewing list?
We actually are watching the newer one. We like the shorter ones as opposed to the long ones. So we do a 6 to 8 because that's all we can handle. So we're watching the newer one that's out on Netflix called Pulse.
Pulse? What's that one about?
The gist of it is it's about an ER hospital in Miami, Florida. And it's got some really interesting characters and stuff on it. And it's only got, I think, 8 episodes.
Good stuff. Okay, thank you very much. I'm addicted. My wife and I, we have a fairly narrow intersection of viewing, but we both love spy stories. Carol, thank you very much
There's
indeed.
Plenty of good ones there too. Thank you.
Thanks, Carol. Carol Schleif, Chief Market Strategist at BMO Private Wealth.